In income tax 2, we are going to discuss regarding income from other source. What is the income from other source? The source of income which is not been received under other 4 heads is known as income from other source. How the source of income which is not been received under other heads are? What are the other heads we are going to learn? Income from salary, income from house property, income from capital gain, income from business and profession. Apart from these 4 heads of income, whatever income is being received under income from is being considered as income from other source. In that we are going to discuss part 1. What is part 1? Describing about the interest on securities. The income which is being received under securities. How we are going to learn in the securities part? We will be learning around what are the shares are being utilized under securities. So what are the shares? We will be having equity shares and preference shares. Equity shares and preference shares. But in income tax, we are going to give exemption for preference shares. So preference shares are to be ignored, not to be recorded. Only equity shares are to be considered. Equity shares, mutual funds, etc. are to be considered under interest on securities. So what are the interest we are going to receive in particular to income tax, describing that how you are going to calculate interest under gross interest, under net interest. What is meant by gross interest and net interest? How you are going to calculate, sir? So we are going to go with the concern called gross interest with face value into rate. What is the formula we are going to go with? Face value into rate. When you are concerning net interest, we will be having 2 steps of description. Step 1, calculate face value into rate. Step 2, we are going to go again gross interest is equal to net interest. Whatever the value I got in net interest when in step 1 with divide into 100 by 90 is a formula we are going to calculate gross interest and net interest. So in the exam paper point of view, we are going to get the question in details of both the formulas to be applied under income tax in the interest on securities. So what is interest on securities? We are going to find out with exempted securities, tax free securities and less tax free securities. So where to apply gross interest, where to apply net interest? Exempted securities are not to be considered in the question paper if they are going to give. We are in the textbook, in the notes we have discussed around 24 exemplary parts where we are not to be considered as securities start to be recorded, and we are going to concern with tax free securities. So again, when I am describing tax free, the condition of tax free with 2 contents, less tax free also 2 contents. Those are government securities and commercial securities. So what is my government securities? When I am describing the securities which have been purchased on the government name, so those are known as government securities. They will be given in the question. These are the questions when the question paper it will be described. This is a government security, this is a private security. How to identify? When they are going to give a government detail, then only we are going to consider as government. If not, it will be a pakka private or commercial securities. Then what is the condition to be applied, sir? Which formula to be applied? Gross interest or net interest? When I am describing gross interest, only for government sectors under tax free description, gross interest. And when I am describing tax free which is commercial, then I am going to go with net interest. Less tax free, again I am having 2 conditions, government and commercial. So when here also less tax free, government and commercial, if it is going to concern, I am going to go with only 1 condition, that is nothing but gross interest. So once again I am repeating, under securities we will be having 3 conditions. One is exempted securities, the other one is tax free, and third one is less tax free securities. When I am describing exemplary securities are to be ignored, not to be considered. In the question paper they are going to provide, we are going to write in the working notes describing that it is to be ignored. And in tax free, again we will be having 2 conditions, government securities and commercial securities. So tax free, when it is government, gross interest, tax free, commercial, net interest. So commercial is nothing but private. And less tax free, government or commercial, whatever the condition, private or government for less tax free, and it is pakka gross interest. So how to identify the question paper less tax free? It will be given nothing else, only the percentage and the rate of the share value. When it is given in that condition, we can describe it as less tax free. But in tax free description, they will be written as tax free government, tax free commercial. So when you are describing commercial, net interest is to be followed under two steps, and and tax free if it is given for government, only one step, that is only gross interest. By that we are going to conclude the condition of interest on securities with the column called gross total income, in the schedule called gross total income. Now after this we are going to have a deduction under 57. After calculating gross interest of securities, we are going to go with the concern called deduction under 57. Deduction under 57 deals about the collecting charges which is being collected by the person. In the question paper it will be given collecting charges. So collecting charges can be given in the value or in the percentage. Whenever it is given in the percentage, the process of collecting charges are to be calculated on the gross interest percent value. With the gross interest value, we are going to concern this collecting charges. And when I am giving the condition of interest on purchase on loan taken, interest on purchase on loan taken, it is will also be given in the question content. So how to identify the question part? In the interest on loan taken for the purchase consideration, there they will be providing directly with the value given. If not, they will be providing the month description. When the month description is provided in the paragraph, as we have done the sums in the class, the question pattern will be of having 5 transactions which will be calculated on gross interest, net interest. That is done. Then what is the condition of the second paragraph condition? In the question will be having note description in the page, what are the problems you have done. There the problem describing the table dividing the gross interest and net interest. And there is a paragraph description. In the paragraph description will be having collecting charges, interest on loan taken, and also will be having either gross interest or net interest description. According to that, when they are providing any date description and the month-wise transaction, in the providing month-wise, when the income is being received for us, it is considered as gross total income. Then no need of calculating the months. It may be 3 months, 6 months, 5 months, 4 months. No need of calculating. Just calculate the average 6.5, 6 by 12 for the rate of description which is given in the month-wise. But when we are considering under deduction 57, then it should be deducted according to the month description to the month year ended of 31st March every year. So for example, if I give you a question describing of October and the purchase consideration is done, purchase consideration in the means I am not paying any interest, I am receiving interest. It is a gross interest. If you are going to think so, directly 6 by 12 is to be applied. I am not counting how many months, October, November, December, January, February, March. Okay, it is 6 months considered. If not October, if I am going with November, also I have to consider 6 months itself. But when I am paying any tax under deduction 57, November, December, January, February, March, so I am going to go with 5 months description only. The payment of the tax, when I am going for deduction, I will count months. But if I am considering gross interest or net interest in the income point of view, there is no need of considering the month. We are going to take an average description of 6.5 for a particular interest. This is a part of one question in I think 11A, 10A you will be finding of interest on securities question, and 10B you will be having other question called income from other source. Here what we are going to solve, sir, this is also income from other source, this is also income from other source. Then what is the difference? We are going to learn here, we have learned around interest on securities from where we are going to receive from stock market, interest on securities. Now here we are going to receive income from other source in other a part of the incomes, how we are going to receive it up. We will be having a dividends. So when you are describing dividends, the word dividend is nothing but profits oriented, profits of the particular year. The amount of dividend is being received. When I am considering dividends, dividends will be only for the foreign companies. Dividend are to be considered. Indian companies are to be ignored. In the same manner, winning from lottery, winning from games, winning from card games, etc. Here when I am describing winning from card games and every condition, the concept of winning from card games, the rate of description would be, if in the question they have given net interest or net if they have provided, then directly we are going to go with the value of 100 by 70. 100 by 70. If it is directly provided as gross, no need of going with net interest, only provide gross interest only. When I am only the question describes winning from lottery gross if they are given, no need of calculating 100 by 70. But if there is not given any description, just they are said winning from lottery 10,000. So winning from lottery 10,000 means nothing but into 100 by 70. Directly we are going to post it up. No need of again going with the concern it up. Then rent from letting of plant and machinery and subletting of houses. If any expenses are there, are to be deducted there and then. Then rent from open land accepted. Agriculture income from other country is accepted. Agriculture from India is exempted from tax. Are to be not considered, as well as directors' fees are to be considered, but income from salary cannot be considered as income from other source. And royalty and commission, these are the incomes which we are going to receive in particular to income from other source. Now whatever income we have been received in this condition are to be calculated under income from other source. If the question is asked regarding income from other source, calculate tax liability, then what is the condition? Tax liability under slab rate we are going to concern. How we are going to concern under slab rate? Income from other source comes under slab rate. If you are having any other incomes, other heads of incomes, that is to be added, and as we know the exemption to be provided according to the age, below 60 it is 2,50,000, 60 to 80 3 lakhs, and 80 and above it is 5 lakhs. The data will be recorded, tax liability has been calculated, then we will be adding 4% for health and education. In the condition, if you are having any winning from lottery, then that amount has to be deducted with the 30% of description, providing that as TDS, tax deduction at source. When the TDS is to be applied, after adding health and education, TDS is to be applied. If the income is less than TDS, then we are going to write as tax due. If it is more than TDS, it is being written as refund. If there is no TDS, we are going to write it as tax liability. Is that clear, everyone? So these are the topics we are going to discuss. We have discussed in income from other source. Thank you.